Hello and welcome to another episode of Exchanges. This week, the question has been raised about FinFluencers and the impact that they've been having both positively and negatively on our lives over the last 5 years. So who better to get in than the Professor of Finance at RMIT in the brilliant Angel Zhong. Angel is an incredible voice in this space. She works very, very closely with ASIC and about the regulations that's been going on in what has become the rise of the FinFluencer. So without any further ado, have a look at this week's episode of Exchanges. Angel, welcome to Exchanges. Thank you so much for joining me. I'm fully aware of the irony of what we're about to do with regards to talking about the rise of FinFluencers, the impact that it's having on finance, economics, etc. But the irony obviously is that we're going to put this out on social media. We're going to put this up online. We are talking about all the kind of things that FinFluencers do. So let's try and put it into perspective. Can you go through, first and foremost, for everyone out there listening and watching, a history of where this has come about and how your involvement in FinFluencing became why you became the go-to person, particularly for, in this country, ASIC?
Of course. Thanks so much for having me today, Evan. Yes, I mean, we are talking about influencers on social media platforms. And just to be clear, I'm not licensed to give financial advice. There's a big disclaimer, but I do have a PhD in finance, and I do research in finance. So my research focuses on things like global financial market, investor behavior, which then allow me to look at things that can influence people's financial well-being. So that's how how I always focus on the financial well-being of our society, because I think if everyone is on a journey to financial well-being, we'll be in a better society. So let me talk through how I started this series of research, which then, led to my research on influencer. So it all goes back to COVID lockdown in 2020. So remember a time we were all stuck at home. We suddenly, we didn't need to commute to work. I think we just had too much time. So and remember that the global stock market, as well as other financial market, all plummeted. So I started to receive a lot of phone calls and messages from friends that hadn't spoken to me for almost 10 years. Um, so they started to ask, how are you handling the lockdown? But the next question is, if I'm about to invest in the stock market, which stocks should I buy? How do I pick a company? So I then realized that because of COVID, because of the lockdown, it prompted a lot of people to focus on the stock market and other financial market. But because of the low barriers of entry, it makes it easier for people to look at the stock market. People were looking at bargain hunting at
Can
that
I
point
just
in time.
go back then, just before we
Mhm.
go any further? Do you think the reason people, particularly during COVID, yes, and you've pointed out that they've had time on their hands, but the interest in investing, let's not just say just the stock market, but investing
Mhm.
came about because they had this external shock that their lifestyle, their well-being, their overall financial literacy was at a level where they were like, "Oh, I need to actually change." Do you think COVID was also part of the reason you're now seeing and were seeing at that time that
Mhm.
phone call that you hadn't had for 10 years?
A lot of phone calls actually from different friends. So COVID-19 is definitely a catalyst, but through my research, I also find that people are actually treating investment as a supplement, or we can say that it's an alternative to gambling. Think about COVID. As you know, during COVID, you can't gamble.
Mhm.
Casinos were closed. You may talk about online betting, sports betting, but there were no sporting activities at all. So my research actually also uncovers that investors or people are actually treating stock market investing as a supplement, or as an alternative to gambling. Because think about this, it's human nature to love gambling because
Yeah.
you're facing uncertainty. You then get that sense of excitement. it's the same when you invest. It is you are also facing uncertainty, and there is fun and excitement involved.
Was that so? That I mean, that's fascinating. I mean, we know about the gambler's fallacy and how that all fits into what exactly you've said. So, well, the follow on from my perspective, working in behavioral economics and having worked in markets like you have, from what you're saying is, were they investing or were they then slowly but going from investing to trading to speculating? Was that the steps that your research sort of saw was going on inside that? Because then it feeds also into the getting back to the finfluencer. Did the finfluencer out there start to see that behavior, see that reaction, and worked out that they could cash in on it?
That's a really good question. So it really depends on how people approach the investing behavior. Some actually invest, for example, the day traders, right?
Mhm.
They actually speculate. So for those kind of investors, is more likely to be, or is more similar to gambling. But there are investors who are long-term investors who focus on their long-term financial well-being. It is a really nuanced perspective here because no matter you invest for the short or long term, you're always facing uncertainty. And whenever you face that bit of uncertainty, you then always get a sense of excitement and fun. That is exactly why throughout my research looking at the trading behavior during COVID, so we first document that over the road, there was a 50% increase in trading during the lockdown period. And because we are looking at gambling, so I then look at in countries where there was a higher level of gambling revenue, such as Australia. So in those country, in those countries, if gambling activities were very active, then during lockdown, the increase in trading volume was more pronounced.
Wow. Okay. That there's a lot to go on there in terms of what happened. Because the other thing that I think that I found fascinating during that period was the rise of low cost platforms. I mean, we can do this. Let's highlight Robinhood because Robinhood was the face of the low cost platform, the face of the trader, speculator, small investor, but also the place of the finfluencer. Is the fact that the other thing you're clearly talking about here is barriers to entry. The exposure to overseas and international inputs has never been higher than it is right now. The ability to invest, trade, and activate overseas has never been higher than it is right now. Was that also, that plethora of where we got to in COVID, that cheap, high level of sort of interesting information, shall I say that, in terms of trying to be politically correct? And then the what happened during that period with a player like Robin Hood, was that all basically just crescendoing into what we ended up experiencing?
Exactly. You're right. There is there was a rise of this low cost, or even in the US, it is a free trading platform such as Robinhood. But in Australia, we don't really have free trading platform. We have like a bunch of these low cost trading platforms that further, lower the barriers of entry. And we are now talking about then why influencers were so attractive. There are multiple reasons. So first, I do give them some credit because they are influencers, and they are really good at talking about complicated finance concept in a fun and engaging way. So they're
Was it
doing it really well. So that's the first reason. And the second reason is that we're talking about the rise of what we call the corona generation of the share market. Many young investors, they enter the share market for the very first time. They're also called Robinhood traders because we tend to associate them with this low cost trading platform. Think about these young people. They want to, invest actively in the share market, but they don't really have the knowledge to do so because they are inexperienced, hungry for financial knowledge, and then they are deterred by, the expensive cost of obtaining financial advice. Then they have influencers out there on social media platforms that young people love, so then can't help but then, resort to influencers for some advice.
that's the next fascinating question. So that is clearly led in your research and in your experience to sort of talk to ASIC, because let's bring ASIC into this conversation and your work that you've done with them. How in the beginning did you look at, the way that financial education and finfluence education were marrying up, and then also was then, technically breaching not just advice, but the overall structure of how finance is provided in this country? What was sort of that sort of plethora of work that you did during that period?
Hmm. So following on my research into the trading activity during COVID, I then, initiated a project to interview a group of young Australians who started investing. Throughout our conversation, it seems like a lot of them resorted to finfluencers for advice. Then I check a list of finfluencers. I look at their background, what they have been posting, and the quality of their advice. So there are a few things that I've uncovered. And first, they do explain some finance concept really well. But second, some of them actually recommended financial products without disclaimers. And it also seems like they're receiving kickbacks from
Hmm.
companies or trading platforms. And then there are also, sponsorship links in their videos. However, in Australia, you need to have a license to give financial advice. If you are influencing people's investment decision, you need to be licensed. But then these influencers at that time, none of them were licensed, which is why I was really concerned because there was a lot of vested interest in their behavior. If someone has a really profitable trading strategy, why would they share with you for free? If I were that person, I have a super profitable trading strategy, I would just execute it by myself so that no one can, share this arbitrage opportunity with me. Because there's no free lunch in the world,
Hmm.
right?
Yeah, there's no free
Um,
lunch.
there's no free lunch. So I then wrote several articles about it. Was invited to some presentations by ASIC and also some international organizations. I think that's how this series of work about influencers began.
Yeah, I want to also point out what you've said there is clearly there are good ones and there have been some bad ones. I'll come back to the good ones because I think that's a discussion that we need to have individually. With the bad ones, with the ones that have obviously been pinned up in the media, the ones that we sort of now probably see as tarnishing that whole term of influencer, the kickbacks, the handovers, as you said, there's no free lunch. What were some of the things they were doing? Like, how were they actually running their book? Because clearly, if they've got that strategy that you've pointed out to, were they setting their position, posting about their position, letting it run, and then getting out? Or were they getting kickbacks from companies that were offshore or that maybe not? What were the real bad ones that, unfortunately we do now have a situation in the media that sees them as slightly a little bit more risque and that finfluencing has a bad connotation? What were they doing exactly?
Mm. Oh, yeah. There are many behaviors that are worth exploring. So, first, receiving commissions without disclaimers. For example, they can recommend like a trading platform, very risky financial products,
So
or
on that, sorry to interrupt. I find that fascinating because I mean, I've been working in this industry for almost 18 years. How that provider thought they could do that? Why did the provider think they could actually have that commission without being, either some form of authorized representative or something around that? Because they know the rules. Surely they were also jeopardizing
Hmm.
their Australian financial services license. Why were they doing that?
Because at that point in time, the influencers may reckon that they are in operating in a gray area.
Okay.
So, I mean, yes, you raise a really good point that the providers themselves are AFSL holders. They
Hmm.
have license. But then it could be that there's miscommunication, or I don't know if the influencers were trying to, increase the appeal of their videos. Because the moment that they put these disclaimers on the video, on their social media posting, that would deter a group of followers. So I mean, I'm not sure what happened during the communication, but I mean, either works, right, in
I mean,
this
that's
situation.
fascinating. What you're saying is the finfluencer also has that problem of needing the likes, needing the social growth that comes with more followers
Mm,
versus, obviously the regulation and being attained as an authorized representative of a certain institution or what have you.
mm,
That also therefore brings up the regulatory issues that come with that is you've got a group of people that are trying to provide some form of information that needs to be regulated, but has this other behavioral pull, which is if I do that, I'm not going to get the response that I want. Was that all part of the next generation and the sort of the genesis part of taking finfluencers to now be regulated? Is that why now there is so much more regulation around it in Australia, particularly
mm.
because we've got to get away from the social side of it?
I mean, what ASIC did in 2022 wasn't really new regulation per se.
Hmm.
The regulation is always there. What was done there was a information sheet focusing on this new breed in the financial market. The regulations was always there. It applied to, for example, you remember the rise of internet messaging board, things like
Hmm.
Hopper. So there was some information sheet or regulatory guidance on that based on the existing regulation. So there wasn't new regulation, but it's all about how as they provide guidance in terms of how you apply existing regulation when you have a new breed in the financial market.
So let's go back to education and go back to the good influencer first and foremost. So we know now since 2022 that basically if you're a influencer of some recognition, you need to now have some form of authorized rep code. You need to be part of an AFSL. They are now doing it much better. They're providing all of the right hashtags and what have you to say this is an ad or this is a link or just better descriptions of where we're at. Do you think they could still go a bit more though? Because again, unless you open the description on that Instagram post or unless you read the very last line of that YouTube video or that, even
Mm.
worse in TikTok, do you think they're still getting the right mood or is there still room to look at how the information's been provided that is clearly advice that is therefore known to the viewer and known to the social media follower than it already
Mm.
is?
That's a really good question. So I've been checking a list of prominent influencers. I think they're all. I mean, of the list that I have been checking, I think they were doing the right thing.
Hmm.
So they either stop being a influencer or they obtain a license, and then they start to provide generic information. For example, instead of recommending a particular stock.
Hmm.
They talked about the general features of stock market, or they talk about the general features of ETFs. So, of the ones that I've been tracking, I mean they're all doing the right thing. But there's an emerging area um, across the years that I'm still concerned about, which is about cryptocurrency and the recommendations of influencers.
Actually, so yeah, we're going another left tangent, which I love. This is why we do this on exchanges. That's the next thing, right? So cryptocurrency, but also what you're then alluding to. It's not just crypto, but it's the the falling of borders, right? The fact that investing, trading these days is now borderless, and information gathering and information consumption is borderless. How do you deal with the finfluencer coming from the States or coming from Europe or coming from Asia that doesn't have the same regulations that we do, that are providing what would we classify in Australia as advice for a product such as crypto or non-fungible tokens or those digital assets? How do we address that as the future with clearly products that are not just highly risky, completely speculative?
Mm. I mean, there isn't a really good solution at the moment because this is really challenging. Crypto, influencers, they both operate on a global scale. So, and influencers based in the US or Cayman Island, they can easily
Yeah.
reach Australian audience. but they may not be subject to ethics regulation. So there is a regulatory vacuum where, misleading or harmful content can go unchecked. I also noticed that some influencers, the global ones, they can actually organize pump and dump scheme on crypto via Telegram or OnlyFans. There are, a lot of platforms, not just Instagram, Facebook, or YouTube. So there are a lot of encrypted social media platforms or subscription based that also make it very hard for regulators to check their activities.
Yeah, you were going into a whole different world there. If we are talking about, OnlyFans and looking at Telegram in terms of that sort of space. I mean, that's what we were talking about before. And very quickly, for those listening out there, what pump and dump is basically you set your position in something, you then put the information out there, tell the world to buy it, buy, pump it up. When it gets to what they think the peak, they dump it, and then everybody else follows out. And so that's a whole nother world, because I think what all of what we've been discussing for the last 20, 25 minutes or thereabouts, Angel, is in the end, this comes back down to education, does it not? It comes back down to the fact that, unfortunately, particularly here in Australia, financial illiteracy is
Mm.
very, very high. And therefore, searching out education online, listening to podcasts, watching, YouTube videos, getting on Instagram and all the other social players is the issue going into the scenario we have now. So the next question, you work in education, you're obviously a professor of finance. When do you think that we should actually start to be talking to people, kids example, about finance? Should it actually be a core subject? Should it actually be introduced into schools, in single digit years rather than sort of, flirting with it in their teenage years?
Yes, exactly. I would say the lack of financial literacy can actually cost us a fortune.
Mm.
So there's a recent global study by Allianz showing that just over a quarter of Australians struggle to answer a set of fairly simple questions on the basics, such as interest rate, inflation, and investment risk and return. That is actually a figure that they put to the lack of financial literacy. So the low level of financial literacy actually costs average household as much as 7,300 annually. So it actually costs.
Well,
um,
my head just sort of went straight away to the compounding costs of that over a working lifetime of 45 years. I mean,
exactly.
that's an astounding figure. You're talking seven figures once you start applying
Mhm.
that kind of time frame with a figure of that kind of level that you're missing out on every year.
Yes, that's right. That is why lack of financial literacy is the elephant in the room. I mean, I teach at university, but I do think that financial education should start in school. At the moment, the Australian curriculum does include some sort of consumer and financial literacy contents in math, humanities, and social science subject, but the extent to which schools are teaching financial literacy can be really ad hoc. So given the importance of financial education and financial literacy, I do think that it deserves, it can be a standalone subject in school.
Do you think the reason it isn't is because it was and has always been sort of culturally seen as sort of this sort of businessy maths, sort of not higher end maths? It's not the maths you need to do. I mean, again, anecdotally, looking through when I went through, the schooling education, talking about financial maths and talking about, basically financial education was grouped into what was referred to as business maths, which was normally treated as the secondary system. Is that also why we struggle with it? Is that it's not put on the same level as traditional maths and calculus? It's not put on the same level as doing traditional subjects. Is that part of why we also struggle to get it into the curriculum?
That's correct. And there's also another factor there I was concerned about, which is about the gender gap in financial literacy. I do
Mhm.
notice that, and also by research and survey, women tend to have a lower level of financial literacy because they tend to be labeled as, some people compared to male who are versed at math. math, and women are not supposed to take financial decisions for the family, which is why there is also a gender gap that I'm also concerned about. So there are a lot of varying factors there in terms of financial literacy and education.
Yeah, the term I hate more than anything is girl math. I just hate that term. It's the most sexist term. It's sort
Hmm.
of it
Yeah.
really, really stereotypifies this concept, exactly what you said, but it's worse than that. It also is used as a justification for decision making. Like that's exactly what girl math is trying to say is, oh, I got it 40% off, therefore, I did well, girl math. Well, no, 40% off is still 60% on, is always the argument. And I think that sort of segues into the whole discussion about the rise and rise of good influencers. Particularly, what we've seen is what you've said just right now. The ones that are really clearly providing the education that most people missed or are still missing are female influencers, and that's a really positive step.
Mm.
Is that because what they're teaching, what they're saying, is not just get away from girl math, but get into the idea that being empowered to actually invest correctly, getting control of your own finances is not just liberating, but the education and the growth that gets from it is getting to a level of autonomy that most people don't have. Is that why finfluencers now are so attractive and becoming more and more a female sort of entity rather than a male entity?
Yeah, I think there's a factors that play, and you kind of also get that authenticity in
Hmm.
those good influencers. You feel like they are the girl in your neighborhood, and I think authenticity is always the key, to grow a large group of audience. Even though I'm not really a influencers myself, but I do when I look at these videos, if I find someone to be really authentic, I tend to follow them more and more.
The final question that I always ask on these exchanges is, if you're in charge for one day,
Mhm,
what would you do? And with that, just to give you some ability to sort of expand on it, can be anything.
mhm.
How would you have that one day to change what you would want to change?
Oh, if I can be in charge of anything, I
Yes.
mean, because I was watching a show about Harry Potter, and the bakers who were baking Harry Potter theme of cakes and desserts. So I was there that if I'm in charge, I would love to have a magic wand. I will make financial literacy as contagious as a viral TikTok trend. So we'll have a world where there's no information asymmetry in the financial market.
Hmm.
Everyone, from kids to parents, they instinctively know how to save, invest, and thrive in financial markets.
That is a brilliant way to end what has been an absolutely fascinating discussion. Angel Zong, thank you so much for joining Exchanges.
Thanks for the opportunity.
Lots of big talking points there, no doubt about it. And the big takeout, and probably the single most clear takeout from what Angel was saying, is financial illiteracy. Part of the reason why finfluencers are so prevalent in our lives now is the fact that we are so thirsty for knowledge. And that's part of what we're trying to do here at Exchanges and bring it to you. So with that in mind, don't forget, please subscribe to whatever pay you're listening to this, whether it's through TV, YouTube, or on podcasts. Hit the subscribe button. Put in also a review, please. We love to hear what you have and your feedback. Want a big thank you to Angel Zhong. Lots of brilliant input. And again, from me, thank you so much for joining us for another episode of Exchanges. If you do have any other questions, don't forget, we do have an email. It's exchanges@evanlucas.com. But until next week, have a great day.